You might not know this, but did you know that Nvidia is one of the top companies in the United States? In fact, in the world, in terms of its market capitalization. So you might be wondering, should you invest in Nvidia? But what I can tell you is that investing in Nvidia right now, it might not get you a result that you'd expect as compared to people who invested earlier. But here's the deal. What if I show you another way to invest in Nvidia and you can make a lot of money? In fact, you can be a millionaire within just a short period of time. So in today's video, I'm going to unpack how you can do that exactly. But first, let me get you updated. So first thing we're going to look here is YieldMax NVDY Option Income Strategy ETF. NVDY, that's the ticker symbol. The price today is $16.65. Of course, this is the price when it closed on Friday. It went down a little bit, about 3%, but after hours on Friday, it seems to go up. So hopefully Nvidia stock will go up when it opens on Monday. But if we look at this chart, we can see here all extended. It says 16.79, meaning the stock has crashed to 16%, about 17% since it was incepted. It was incepted at $20 at 16, so you have lost about $3.40. But this is deceiving if you look at just chart, because there's more to it. If we look at, let's say, a month, you are down about 3%. If we extend to 6 months, you are down 4.91%. Year to date, meaning from January to today, you are down about 29.92%. But if we look at 1 year, we're down to about 33.48%. And if we extend it to 5 years, which is the lifetime of this ETF since it has been out, is about 16.79%, or round up to 17%. Earlier this year, this ETF was down around like $13, and then it keeps going up. Now is at $16.65. So this is a very good lesson that shows you these ETF actually can recover, because a lot of people sometimes say, well, these ETFs, whenever they go down, they never come up. This is something I always argue against, because sometimes they fall and sometimes they rise up again. Depends on underlying stock. Yes, they're not going to have the same performance as underlying stock. For example, if you look at the Nvidia chart, if I compare this to Nvidia stock itself, there's a way difference in terms of price movement, because this is an ETF that right calls, meaning they're going to lose the momentum because they pay those distributions they have to sell. Underlying stock will always outperform these cover call ETFs, and of course in return you are getting distributions or income from this ETF. So let me show you another chart. The market cap right now is 1.91. I think it went down to 185. 52-week range is between $12.47 to $26.83. This is within a year, meaning the stock has traded, lowest was $12.47 and highest is $26.83. So if you bought at this price, you are down massively, but with your distributions, hopefully you are up. It depends when you bought. So if you bought at $12.47, right now you are up massively in price return and your distributions. NVDY was one of the original YieldMax ETFs, so has been around for a long time, about 2.3 years. Total return with a drip since it was incepted is about 261%, and that's about 74.72 compound annual growth rate. And if you look at just total return with no drip, meaning you take your money and you don't consider reinvesting back to the stock, now you're up about 152, and that's compound annual return about 49%. Share price return, as we've seen, is down about 16.4%, and that's compound annual growth rate of negative 7.48. That's, of course, is a price without considering all the distributions you have received. But if we look at the dividend increase, it has increased its distribution about 12.5%. And the reason why this is positive is because it paid lower at one point and then it increased its distribution. So this is a pretty different as compared to other ETF like MSTY or PLTY. Their ETFs have actually decreased their distribution because at one point they pay very, very high and now they're paying lower. So if we look at the dividend increase percentage on those ETFs, it will be down, but for this ETF here is up. This is something very positive as compared to other ETFs. Below, here's the chart showing us NVDY performance. The darker green is performance with a drip and the lighter green is performance without drip. So drip, as I've explained, is reinvesting your distribution. Every time you get your distribution, you buying more shares with your distributions. And with no drip, meaning you take money, buy other ETF, or you take the money and use it. That's the performance. So this shows you the power of compounding, because whenever you drip, meaning you're compounding your money. Every time you get distributions, you're buying more shares, and those dividends make more money every time you buy more shares. Now, if you look at the YieldMax website, NVDY, YieldMax, Nvidia option income strategy ETF, distribution rate is about 66%, and this is based on the last distribution they have paid. Confirming the performance I showed you earlier on the official YieldMax website, we can see here NVDY NAV 262, NVDY market price is 157.7, so about 158. So this is a pretty close to what I showed you earlier at 261, 260. So this is a pretty closer to what I showed you earlier, because I always like to come to official website to verify numbers I'm seeing from other website or from the spreadsheet I always make. If we look at the distribution detail, the first time they paid was June 15, 2023. Remember, this was one of the original YieldMax ETFs came out, and last time they paid was August 15th. 2025. So from 2023 to 2025. So YieldMax has been paying for over 2 years with this ETF. So that's a pretty good record. Fund information, ticker symbol is NVDY. It was accepted May 10th, 2023. Trade on New York Stock Exchange. Management expense ratio, you are paying 0.99. This is how much YieldMax ETFs charges you to own this ETF. Net asset is 1.85 billion. I believe this is the third YieldMax ETFs in pertains to its net asset. The first one we have MSTY, the second one we have ULTY, and this is the third one, I believe. Top 10 holdings, as you all know, this ETF does not have any direct holdings of NVDY, but it does write calls, and they have United States Treasury. These are bonds they use as a collateral and also generate some income from these bonds they hold. And of course, it writes and sells cover call options. For example, here we can see there's a call option that expires on September 19, 2025. The strike at 165. There's another one here, expires on September 19, 2025. Call option or strike at 170. So this is a strategy they use to generate income. So now let me show you fun parts, and this is going to be all the numbers that you need to be able to generate a lot of income. So now let's move to my spreadsheets that I made to show you how you can take your $10,000, your $20,000 to turn into $1 million portfolio within just a few years. All these numbers I'm going to show you here are just estimate based on the numbers we get from the YieldMax website and based on average return. There's no guarantee that you're going to generate this type of income. And this video is for educational and demonstration. It's not meant as financial advice. So if you want to invest in this ETF, NVDY, make sure you do your own research. So let's start. So the first thing here, I have all the distributions they paid from beginning, and cumulative they have paid $33.55. And if you just do average distribution is $1.20 that they have paid, because we can see here there's the first time they paid 75 and there was even 42. There's $1.53. There's $2. There's a 261. So in order for us to get the perfect numbers, we have to do average, and that's why we get this 120. Do you remember, guys, I showed you that NVDY has a dividend increase at 12.5. So that number is average of dividend increase from 75 cents to $2 to $1.19. The last time they paid 84, but before that they paid $1.03, and before that they paid 67, before that they paid 163. So if we aggregate and we put all together on average, they have increased about 12.5%. So if we take all our distributions, we add to the price of today, which is 1665, we are getting 50.20, and that's return of 151%. And this is just return with no drip, as I shown you earlier. For me to confirm all the numbers I see from different websites and even from YieldMax official website, I always plug my own formula to see if the numbers match. Now we know the current price is 1665 and average distribution 120. So that gives us a yield of 86.49. Asset under management is 1.85, as I shown you earlier. Now let me show you the income projection here, guys. Again, this is an estimate based on the numbers that we have. So if you invested $10,000 today, you're getting 601 shares, and that's monthly income of 721. Annual income of 8,649. 25,000 is going to give you 1,500 shares, and that's 1,802 per month, and that's 21,000. So as you put more money, of course your income increases. The meaningful income here is from 100,000. That's going to give you 86,488. So if you're getting over 86,000, I think that's a meaningful income that some people will be able to retire with this one, even after paying your taxes. If you pay taxes, I think at 15% rate, you might end up with, let's say, 60,000. 60,000 for some people. If you live in a small to medium city, you'll be able to retire. There are a lot of cheaper cities that people can live with just $6,000. It all depends on your lifestyle. But if you want more, you put 150. That will give you over 9,000 shares, and that's 10,811 per month, or annual income of 129. So if you're getting 129, 130, that's for sure it's enough income to retire for 80% of people. We can put more money up to like 500,000. That's $500,000, which I don't see anybody putting $500,000 in ETF like this unless you are multi-millionaire already. So the first table that I just shown you, this is for people who want to invest today and receive the distribution. But let's say you're a person who doesn't have as much money, they just have a little bit of money and they're not planning to retire today. They just want to put their money there and reinvest all the distribution and wait for a certain period of time where they can actually retire or use their money. How are you going to do that? I'm going to show you here in next table. So this is investing $20,000 for 10 years, investing $0 per month at $0, meaning you just put $20,000, you don't add any cents after that, and your share price return is $0. We are assuming that the share price you're buying today will stay the same. It's not going up, it's not going down on average. Of course, we know that's not reality, but in order for us to do math, that's how we assuming. That's what I said earlier. This is just estimate and assumption that all these numbers will remain the same, except of course your distribution will increase. Dividend yield 86.49, because this is the average yield that we have get since inception. First year you put $20,000, your distribution receiving that 1 year will be $17,298. Of course, you have reinvested and put all that money back. At the end of second year, your portfolio is at $52,259, and distribution you're going to receive is $32,259. At the end of third year, your portfolio is over $100,000, and distribution you're receiving that year is over $52,000. Let's go to seventh year. Your portfolio now is at $655,000. A distribution you're receiving that year was $207. Altogether, since you invested, it's going to be a $653. So you see, you only put $20,000, but you have received over $600,000. That assuming you invest all your distribution back to the share price. At that point of seventh year, you're not even a millionaire yet. And our point is to be millionaires now. You just keep doing the same thing you've been doing all these 6 years. And your ninth year, now you have crossed to $1 million portfolio. You have over 1 million a quarter, and distributions you're going to receive that year is over 300,000. Now at 10th year, your portfolio is a 1.7 million. Distribution you're going to be receiving is over 449,000 per year. And altogether you have received since you invested your money is over 1.7 million. So pretty much all gains is just from your portfolio because you only put $20,000. So guys, that's how you can take your $20,000 portfolio to $1 million portfolio investing in NVDY, assuming all the numbers stays the same. So we know this might not be reality, and we don't know what Nvidia stock will perform going forward. But if you want to know what's real, check my next video. Don't forget to smash the like button, and don't forget to subscribe and share with someone you think this video may help. Thank you very much for watching. I'll catch you on next video. Bye bye.